Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. For the next few minutes we're going to be looking at Bitcoin. Been a busy few hours in Bitcoin, and we are going to start with our Elliott wave analysis first and then wrap things up with some basic technical analysis at the end of the video. And the first thing we're going to do is discuss how our primary count, which was the idea that primary wave 4 had completed in an expanding flat pattern, is incorrect and now been invalidated. So we're going to have to move things over to our alternate count. This is why we always have an alternate count, or try to have one. And we're going to be supporting that until proven otherwise. So here was the preferred count, which has now been invalidated, which was the idea of an expanding flat pattern which peaked out early in March, around the 13th of March. And I was saying we see a 3-wave pattern into an A, a 3-wave move into a B, and then we had a 5-wave move down into a C, completing a wave 4. Well, that has since been invalidated with this move here, which has come down below where that 5-wave move completed, and we've now had another move up and another move back. So this count is now incorrect, so we're going to move over to our alternate, which we've been following for roughly the same time. I've always included it in every Bitcoin video because it's always been a potential, well, an alternative. So here we go. Now this is the idea that we completed later in a wave 3 on the 14th of April, and we have since been working our way down in a 3-wave correction, and this now looks to be the preferred count. Now where this wave finishes, we've got a couple of targets here. We've got C equals A parity, so this is the length of A projected from the B to find the C, which brings us to, I'll put a label on it because it is a target we should be looking for. So ADC parity is 41,802. We're currently trading around 49. We've come down to lows of this daily candle of around 45. So we could sell off another 8 grand or so, 7 or 8 grand to head down to parity here, where we could expect to find support. But we need to see a completed wave structure in here. So what we're going to do is come down to 2 hours and see if we can find anything that looks like it could be. We now have what looks like a wave 1 down off of the high here. We could be down into a wave 3, and we could now be working our way into a wave 4 before we come down lower in that 5th wave. So this is now the preferred count. This was never invalidated because we never came back above the high at 64,824, and this could potentially go quite deep. So let's just look for some of the options. We have a 38.2% retracement target here at 37532 spot 76. What we'll do is we'll just put I prefer to use these price labels now, they're just easier. So there you go, we'll say whatever that is the target. This is the 38.2% retracement, which is the green line here. This is the retracement of the wave 3 up. So we could come down to here, which is around 37,000. It's highly likely that if this is a primary 4, we will retrace somewhere into the previous wave 4 territory on the intermediate time frame, which is in this box down here. So potentially further to go. I don't at the moment have an alternative to this count, as the price has only invalidated the old more bullish count very recently, but I will go away and work on one and see if I can find an alternative to this. But in the meantime, this is now the preferred count. So this was backing up our previous count for several months, and this is now the one we're going to follow until proven otherwise. So we've peaked out in an ending diagonal. We're looking for a big 3-wave move down. We don't think it's done yet. It could go deeper. It's possible that it's done and that there's some other count going on here that I can't see or have yet to discover. But for me, this has been valid the whole time, and since the break of that low, this is now the preferred count. So I'm going to stick with this, looking for some kind of bounce after a 5-wave move down to complete a C, looking for some kind of bounce to find the completion of that wave 4. It's possible that this is just the beginning of a 3rd wave down, rather than, so we've gone 1, 2, then in here we've gone 1, 2, 3, 4, 5 into a 3, 4, 5. That would potentially bring us deeper. So anywhere in this prior wave 4 on an intermediate time frame, around this target for 38.2, around this target, we could go deeper. It's potential we could go deeper. Maybe a 50% retracement, but let's look at these areas first and see if anything happens in the next week or next few days, which brings us down here to where we can find support and potentially set up a trade. Whenever we do rally wherever it happens, whether it's from the 1-to-1 parity. We want to see that little 5-wave move back up and 3-wave move back. That's what we define a reaction as. We come down to a level, we bounce, we retrace, and then you're a buyer on that retracement and off you go. So we want to come down to a support level, find some kind of support, get a reaction, then we can consider a long trade from there, or adding to our long position if you're already accumulating. And then that, once it completes, we'll be bringing us up into our 5th wave, and we don't really know where that's going to be. Once we get some kind of confirmation that we've completed the 4th, and we clear the previous highs, then we should look for 5-wave targets. The traditional targets are 61.8%, the length of 1 and 3 from 4, or the length of 1 projected from 4. However, we know, given previous counts in the crypto market, wave 5s can be pretty impressive. They can be a bit of a FOMO wave potentially and really fly up quite violently. So in the meantime, A equals C, or C equals A, this level here 41802, and this level here at 382 in the prior wave 37429, accepting this ending diagonal into a zigzag as our new primary count. Okay, so now that we've done that, let's wrap things up and have a look at the basic technical analysis for a moment. We're just going to come out to the weekly time frame here. We're going to log the chart. Okay, and we're going to zoom in on this area here. And then we're going to expand the thing a bit. There we go. And then we're going to bring up our moving averages. 10 in yellow, 20 in blue, 60 in orange, 250 in green. These are all our exponential moving averages. And then we're going to bring up our RSI and our MACD. So let's have a look and see what we can see on the basic technical analysis side of things. Let's just zoom into here. So we've fallen through the 10 exponential average on the weekly time frame. We're trading below it currently. We've wicked down to the 20 and through it, but we've bounced. It's the first time we've come down and wicked through the 20 since August of last year, since this big run up began. So it is a potential warning sign here that a more significant retracement is now underway, and we should look for lower pricing in Bitcoin in the coming weeks and months. RSI has come down from overbought conditions. We saw a divergence between the high here on the week of the 4th of Jan, and then the subsequent highs on the week of the 15th of Feb, and then the week of the 12th of April. We saw a series of higher highs in price and a series of lower highs in RSI, which still continue to trend downwards from overbought now into neutral territory. My gut tells me that in order to see this divergence completely play out, we need to see a move down into oversold territory, which would suggest a more violent breakdown over the coming weeks. However, if we do find support in the Elliott wave count and we do reverse get above this high, we can start cancelling out this divergence and push up into that 5th and final wave. But from a basic point of view, analysis point of view, it does look more bearish now. It does look like we are in a position where we could break down further. Bright, dark, or should I say dark bar on the histogram here on the MACD for this week, showing more bearish price action. Crossover of the short and long-term moving averages. Short-term moving average now accelerating away from a long-term moving average, which is also rolling over. Sign of the 10 rolling over, 20 flatlining here as well. So there is potential for a more sustained sell-off, but we have to see what kind of price action we get in the next couple of weeks. Do we come to some support levels for the count? Do we reverse from those levels? Do we get a reaction, or do we just start to melt down? If we start to melt down in a really vigorous way, which takes us beyond the prior wave 4, we have to reconsider the count and consider this to be potentially a more substantial top, perhaps on cyclical time frame, or maybe even the 5th primary wave. But we can't get ahead of ourselves. It's by no means meltdown time yet. We're just seeing some real weakness for the first time in many months. So we just have to be on guard, keep a close eye on the count and see how this develops. Let's come down to the daily time frame. Okay, so on the daily time frame, we have had a move down to below the 10, the 20 and the 60 exponential moving average. We have the 10 crossing through the 60 with the 20 not far behind, with the price still below it. like we are expecting that free wave move down lower. So if we do get the 20 cross through the 60 with the 10 below it and the price action still below it, that would suggest that we're not done yet, that we've got some more sell-off to come. We're still above the 250. The 250 exponential moving average is a major moving average on the day time frame, and it would bring us into that prior wave 4 on the intermediate degree if we came down to test it. We should expect to find support there. We do have this big node in the volume profile here as well, so maybe we just need to test a more significant support level. We did have a move in the divergence we saw build up here between the high of the 9th of Jan, and then the high of the 21st of Feb, and then the high of the 12th, 13th of March, and then the high of the 4th, 13th of April. Continuous lower highs in the RSI with another lower high now that divergence has started to play out, move down into oversold conditions, a bounce, potentially another move deeper into oversold, I think could be on the cards. MACD as well, also weakening, showing that same divergence over time of lower highs that is now playing out. And yeah, that's essentially the setup from a basic technical analysis point of view. So we really do need to start bringing the two together at the moment and considering them equally. From a basic technical analysis point of view, things are continually to look a little bearish, a little weak, and ready to correct to a more substantial basis. Our Elliott wave count isn't calling for anything too severe. If this count is correct, a move down to the high 30,000s. Sorry, this is the flat pattern. The close at of course it is. This is our count here. Let's just do a quick reminder of what we're looking for. The bottom of this range into the prior wave 4 is all the way down at 29,000, so 29, 30,000. The top end is around only 41,000, somewhere in the middle, around that 38.2. We see 37,429, also right around the 250-day exponential moving average. So that's it, guys. At the moment, I think we've still got a bit more to come. I think we should accept this is our primary count now, ending diagonal into a zigzag. And we have to bear in mind that the technicals from a basic analysis point of view are looking weak. For the moment, they're looking weak. But anything can happen in crypto. We know how quickly things can turn around. Anyway, guys, we'll leave it there for the moment. I am thinking of looking at XRP and a couple of other altcoins soon. I just want a little bit more time to collect a little bit more price data, because we seem to be seeing, and this is just personal experience talking, it might be completely off the mark, but I remember the run up when I was in the market going up from 2015 up to the peak of 2017, and I remember Bitcoin dominance fading, Bitcoin topping out, and then all the altcoins topping later, and they were pumped one after the other, sometimes over a succession of weeks, sometimes over a succession of hours within a single day, and that was a sign of a major top coming in. Now, we haven't seen that kind of price action yet because we haven't had a real severe breakdown in Bitcoin yet, but if history repeats, that could be a possibility. I don't see it yet, but we'll just keep our eye out for it. If we do get a violent move down in Bitcoin which takes us beyond where we'd expect to find support, then perhaps that Bitcoin dominance into alt season topping process has begun. But that's just speculation at the moment, so we won't say any more on that. Alright then, guys, if you are new to the channel and you've liked what you've seen, please subscribe, smash the like button. Let us know what you think in the comment section below if you want to. Hit the little bell notification icon to remain informed of future video releases. And thank you, as always, to my Patreon subscribers. I really appreciate your support. If you're interested in becoming a patron and looking at the potential benefits you can get, there's a link to my Patreon in the description box below. And there's also a link to my Twitter feed in there. If you're not following me yet, please head over and do so. Alright, guys, take care. That's probably it for this week now. I will have a video at the weekend for... we're going to cover the SPY, and I might look at the Dow Jones as well, but I'm definitely going to look at the SPY this weekend. So you've got that to look forward to. Take care, and I'll be back with you soon. All the best.